Welcome, Tara Masson. Am I saying that right? Is it Masson?
Yeah, Masson.
Masson.
Yeah, I like to equate that to the Paul Masson wine.
Paul Masson.
There you go. Remember that wine?
Yes, all the good wine in its time, but much better quality in your case.
Ah, thank you.
We're aging ourselves. So you are. I don't want our listeners to miss out on some of the benefit. I've known you, I think, for 4 or 5 years. I've referred a whole bunch of people to you. They come back really happy, saying, this is really good. She set us up with the right policy, or we're fine where we're at. We got that. But I don't want to give away a lady's age, but your dad was an insurance broker, was he not?
Yeah, he was a State Farm insurance agent.
Okay.
That's how I started my career when I was 15 years old, working for my dad in his office.
So that means you've been at this for what, 10 or 12 years?
Yeah, about that. Yeah, more like 30 or 40.
You don't have to disclose that. Okay, so you've been at this for a while. Now, as opposed to that other company or Nationwide or Allstate or AAA or whatever, you're an independent insurance broker. So you can shop around with everybody, right?
Right. So we shop all the companies that we represent, and a good number of those companies are domiciled right here in Michigan. So they're local, they have local products, they employ people in Michigan, and they're really, really competitive against some of the big national companies.
That's like Citizens could be one.
Citizens, auto owners,
Auto owners, okay.
Frankenmuth, Pioneers out of Flint. Those are our big four that we write most of our home and auto insurance with these days.
Okay, cool. So they do that. And you've got a couple of, or more than a couple of initials after your name, some of your professional credentials.
Right.
Talk about that.
Right. Well, I've been licensed as an insurance agent since I was 18. I got licensed right after I got out of high school. And then I obtained my CIC, Certified Insurance Counselor, which is a course that, oh gosh, you have to take 5 different classes. Each class is 40 hours of instruction, pass an essay test. That's pretty rigorous. And I've held my CIC designation for 15 years. So every year I have to do a 40-hour update on that class. And then I have a AAI, Accredited Advisor in an Insurance, similar kind of program. And then one more designation is specifically to workers' comp insurance. So an expert or extremely knowledgeable in how workers' comp works, how the rate mods work, and a lot of training background there as well.
Yep. That's real important for the people that I work with, because I work with a lot of self-employed people. So insurance is important. Typically we're talking about, people who have jobs and the property casualty, meaning their automobiles, which we're going to talk about in a minute, their homes, identity theft insurance. What else am I missing? I mean, you cover all insurances, but
all the toys that people have, the boats, the snowmobiles, motorcycles, an umbrella, which gives them extra liability coverage if they ever were to get sued. I'm not a specialist in health and life, but we offer that in our office, and I do a fair amount of life insurance, small term type coverage. And then commercial. We're a large commercial agency. Our agency is about $50 million in premium is what we handle as an agency. We have over 50 employees, and we have excellent companies for both commercial and personal lines insurance.
Excellent. And I like that you're Dave Ramsey, financial piece fluent, and you understand the idea that we're having the debt snowball, that while we want to save money, just like a business owner, you don't want to be penny wise and pound foolish. And
right.
I mean, it's a sad thing for somebody to say, oh, I'm saving money, I canceled my life insurance. You go, no, that's not the way a responsible adult, any parent behaves.
Right.
You don't, not have, proper insurance on your home, and then a disaster could instantly destroy months or years or decades of savings. So,
right. And I think that's why this auto reform that's coming up is so important, is because people are going to see the savings And with those savings, they're going to be cutting their own benefits. And that's the scary part to me, is that we have known auto no fault the way it has been since 1972. And this is the first change that we've ever had in auto insurance.
And we're
I've
talking
only
about July. I'm sorry. I just want to frame this for people listening
Sure.
to this now and people listening to this coming up the summer of 2020. Is it July 2nd? This auto
Yes.
change comes into effect?
Yep. This auto change comes into effect, and it's the first change since 1972. So people don't, they haven't had to make a lot of decisions or a lot of choices, because the state framed the auto insurance to that these are your benefits, you buy it, and they're there. Now people are going to have to make choices, and those choices really need to be looked at in terms of cost benefit analysis. What are you giving up to saving a little bit of money?
Mm-hmm. Before we get into that, and I've got some PowerPoints that you sent me that are excellent. Just explain to me, and this has been explained to me many, many times, and I've tried to explain it to people, and there always seems to be an exception. Okay.
Mm-hmm.
So as if you were explaining this to your 13-year-old son, Anthony. Really,
Right.
we have Michigan is a no fault state.
Mm-hmm.
Okay, so people will say, this is my understanding. Two people are in an accident and you go, okay, it's a no fault state, and each person goes to their respective insurance carriers and then they go at it. But possibly the persons who's caused the accident, their rates go up, and you go, but it's a no fault state. Or if it happens on private property. So without going down too many bunny chip trails, explain what no fault is. And
Well, a lot of people think that no fault only applies to repairing your car, and it does apply to that. So currently we are in a no fault state. If you and I are in an auto accident, Derek, you're going to go to your insurance company to get your car fixed, and I'm going to go to my insurance company to get my car fixed. And that's kind of going to be the end of it, other than the person who caused the accident, their insurance will probably go up because they caused an accident. But it also applies to liability coverage. And right now, before the auto reform hits July 2nd, 2020, if Derek, the people in your car are injured, you're going to go to your own policy to get coverage for their medical payments. And the only way that you can sue me if I cause that accident is for 4 key components. There has to be one of these 4 things has to happen. I would have had to kill somebody, dismember, disfigure, or cause a closed head injury. Anything other than that, you can't sue me for. You have coverage on your own policy. We're a no-fault state. Your own policy provides that coverage.
mm-hmm.
After July 2nd, that is going to completely change. You will then be able to sue another person for medical bills if they caused your accident. So you and I are in that same accident. I caused an accident to your car, and I've injured people in your car.
Mm-hmm.
If you don't have enough coverage, or you didn't purchase enough coverage on your own, you will now be able to sue me, which means I need to carry higher liability limits to protect me in a court of law. And that's a complete change.
Similarly to if I own a business and somebody slips and falls on the sidewalk during winter time, if I don't put enough salt down, they can sue me and my business. Or in my home, if somebody slips and falls or eats a bad piece of food or something.
Right.
I'm trying to think of examples, but something that I'm responsible for now in an auto vehicle, which can be a deadly weapon used in the wrong hands or legitimate accidents.
Absolutely. People are getting hurt all the time in auto accidents. The statistics are huge on auto accidents in Michigan and America.
So since 1972, nothing has changed, but somewhere along the line, help me get the acronym, the PIP, or Personal Injury Protection, which is, if I had a car here, here's the little car. It's just the car, and it's whether it's worth $1,000 or $100,000. There's the dollar figures are easy to figure. If we have our little sock puppet, our little people, I'm not very good at this. But now you've got flesh and bone. You've got, we can die, we can cut, we can have closed head injuries. This is that part of the insurance. How long has it been that there's literally been zero cap? Because today, I mean, it could be $10 million, $100 million, and a person's going to be covered, right?
Right. So since 1972, if there was any injury in an automobile, your own auto insurance policy would pay unlimited medical coverage for the rest of your life as a result of that accident.
Okay. I didn't know it's been that long.
Yeah.
Okay. Now it's not just the insurance carriers that do that, but it's actually been the state that's underwritten
Correct.
that. So I don't want to get too political, but understanding that insurance companies are in business to make money. And if they don't, they go out of business, just in a healthy way. They say, we're not going to write these policies. That has been funded by this, not federal, but by the state government, right?
Well, it's not funded, but it's mandated by the state. It's funded by our insurance premiums. So the insurance companies have predictions and modeling tools to determine how much they need to charge in order to pay those bills that are guaranteed under the state law. There is a tax on each auto insurance policy. Right now, that tax is $220 for each vehicle insured in the state of Michigan. That tax does go to the state of Michigan to be handled. So any claim for medical that gets over $550,000 in medical bills then gets paid by that fund where the taxes go to.
Okay, that's interesting. So if I pay your company, whatever, let's say $2,000 a year to cover my car, 200 and some odd dollars of that goes to the state of Michigan to cover the insurance for the unlimited care.
Medical. Yep.
So as of July 2nd, that, remind me of the number again, 220. 220. That 220 will go away.
Well, part of it will go away. So that fund is going to sort of sunset or run out its potential claims. They have claims in there all the time that they're paying, especially for critically ill, injured people who will continue to have bills until they pass. There's a new fund that is going to start, and if a customer after July 2nd elects to have unlimited medical on their auto insurance, they will pay $100 to a new fund per year per car. That fund will then continue to pay medical bills on an unlimited basis if that policyholder selected unlimited medical for the rest of their life. For those who are going to take advantage of the option that they can now choose how much medical insurance they want in their policy, those people will not contribute to the fund because they won't ever have to access the fund because their medical bills will be capped out at whatever dollar limit of coverage they elect to purchase.
Okay.
Now that fund is going to change over time. $100 per car per year is just the starting place. Then, as claims come in, that fund could increase or decrease that tax depending on what they're paying and what they're seeing from a medical claim standpoint.
Okay. So right now, medical bills are, and I just want to take a step back for a minute to help me and everybody else understand. If somebody has Blue Cross or Blue Shield or HAP or whatever, most medical bills goes through major medical health insurance.
Right.
Okay. Non-accident. An injury that occurs at work, okay, whether it's a white collar job like you or I have or a construction job, that's covered under workers' compensation.
Right.
And an automobile accident, the insurance is covered under PIP or personal injury protection.
Correct.
So if somebody runs into me today, well, let's not say today, July 3rd.
Right.
Okay. I wasn't on the job, so workers' compensation doesn't cover me. I was in my car. Let's give two scenarios. I have $1 million in damage done to me.
Mm-hmm.
What's the scenario if the person who runs into me has no coverage, if they have $500,000 or they have unlimited? How is Derek taken care of?
Well, it's two coverages, your own auto policy and whatever medical limit you selected. So the options for you in your situation are unlimited, $250,000 of coverage, or $500,000 of coverage.
Okay. And let
So
me know when you want me to pull that up on the screen.
here, you can pull that up.
Okay.
Yeah, I've outlined on that screen a few of the options. You're not a Medicare recipient and you're not a Medicaid recipient. So these are your options. Once that dollar limit is exhausted, let's say you picked the $250,000 option.
Mm-hmm.
When that's exhausted, you then could sue the person who hit you if they were the cause of the accident for your additional medical bills.
That's if I didn't have unlimited on my own coverage.
Correct.
Okay.
Correct. So we're moving away from that no fault state. Now you're going to be able to sue people because they caused something. And the reason they changed to a no fault state back in 1972 was because the court system was so backlogged hearing cases of vehicles being injured, people getting in car accidents and suing each other for medical bills. And we're going back to that. So we now can sue each other. And I don't know what those court dates are going to look like. Nobody does right now.
Mm-hmm.
Lawyers love to have court cases to try and to negotiate. Definitely, they're going to prosper in this new system. And people may get into a position where they're in an accident and they're waiting months and months and possibly years to get to court to have a judge make a decision whether or not they can collect from the other person.
So in my case, if I have that $1 million injury and the person has no coverage, if I have unlimited, then I'm fine.
Correct.
And theoretically, just that $100 a year will take care of that.
Right.
Now, depending on lawsuits in the future, that could be a lot more than $100, I imagine.
Yeah.
If I don't have that coverage, let's say I just have $250,000, now I'll be covered for $250,000, but the next $750,000, I'm going to go bankrupt or I have problems with that, right?
Right. You're either going to go bankrupt, you're going to go on Medicaid or Medicare, you're going to file for disability, or you're going to sue the other person and try to get something from them.
Assuming they have $750,000 to get.
Right.
And if they're worth $5-10 million, that's can probably be doable. If they're a student or a teenager or they don't have that much, then
they don't have much money. Now, to compound that, you could go to court, sue the other person, get a judgment against them, and they would have to pay you over their lifetime. So they could have their wages garnished for up to 25% of their wages for the rest of their lifetime, paying the debt that you've incurred because of those medical bills.
Okay. So it's bad for them, even as wrong as they may have been. And it means I'm getting my medical payments very, very slowly.
Right. It's not a good existence for either party.
Yeah. Even if they make $100,000 a year, even if they make $500,000 a year, 25% of that, it's going to take a long time to make up that $750,000.
Correct.
So, and then I could not go to Blue Cross or Blue Shield for my medical bills, my major medical in that case. They wouldn't cover me?
Well, some policies will and some policies won't. It just, right now we have a lot of policies that are sold for health insurance in the state of Michigan that will not pay auto-related medical bills on a primary basis. They will pay secondary after your auto is exhausted. Then they may have caps, they may have deductibles, they may have copays.
Okay. So yeah, they're going to have their deductibles, they're going to have their copays. So there's a lot of details. So
there is a lot of details. The other thing is that the PIP doesn't just cover medical expenses. It also provides protection for people who need that coverage. It provides coverage for attendant care. So if you've been injured in a car accident and you need somebody to help you get dressed or feed you, or any kind of services that you can't take care of for yourself any longer, you've hired somebody to watch you 24 hours a day if you can't be left alone anymore.
Mm-hmm.
It also has coverage for lost wages. So if you've been in a car accident and you're no longer able to work, it will replace your income for 3 years, or 80% of your income for 3 years period of time.
Mm-hmm.
Hopefully allowing you to either retrain and heal from your injuries or get onto a disability program through our federal government. It also provides coverage for funeral, burial, survivor benefits, housing modifications, and vehicle modifications. So that's a big one. You're in a car accident and you no longer can drive your vehicle, or you need a handicap or wheelchair accessible home. Your health insurance doesn't pay for that, but your auto insurance, if you have unlimited, would pay for modifications to your home, like widening all your doorways, modifying your bathroom and your kitchen to allow for a handicap accessible lifestyle.
Yeah, and if you haven't known somebody in those circumstances, there's a real need for the right wheelchairs, the right cars that can be driven with your hands and not your feet.
Right.
Yeah, it becomes necessary to live, to offer to be a productive member of society, to be fully human and live in dignity.
Right. There's a lot of expenses to a handicapped person to function in our world.
Okay. So there's the option for unlimited. I'm just looking at your sheet here, working from the top as
Yes.
we know it now. $100 will keep me at the status that I am right now.
Well, that's the money that goes to the MCCA fund, Michigan Catastrophic Claims Fund. So that's a tax that will get cut from $220 a car down to $100. There is also a different premium charge that would be associated with either the unlimited coverage, the $500,000 of coverage, all the ones that are listed here on the screen, the $250,000 or $50,000 of medical, or completely excluding the medical coverage, the PIP coverage, the personal injury protection coverage from the policy. So there's two components: the tax, the MCCA tax, and the premium charge. So every company is going to price it a little bit differently. And it's really something that you kind of have to have a in-depth conversation with your insurance agent, get some prices, understand what the differences in benefits, and understand what the differences in premium are.
Okay. I have to chuckle a little bit because I work with some young people, and when there's three components just to the PIP component, and then there's the whole conversation of the liability, the collision, the comprehensive, and those are important conversations to go into. So I'll encourage people to discuss those with you, be it the young person getting their first car, or the person who's not so young, who, let's say they've just now done their debt snowball and they're celebrating because they're done away with their $400 a month car payment, and now they're saving that money every month. Is there a decision to now not have full coverage for collision and comprehensive on that vehicle? And there's some personal coverage to say, hey, I can self-insure, not the medical component, but just the replacement cost based on a car that's worth, let's say, $4,000. Or do we want to take the risk for a $10,000, or a car that's fully paid off might still be worth $15,000 or $20,000? So that's where these conversations are important, based on the individual and the money they have in the bank and their reserves and their risk.
Right. And, oftentimes anybody who's shopping insurance, that is what they focus on, is how much coverage do I have to repair my car? And as important as that is, it is critically important, especially if you have a newer car, but people don't understand the medical and the liability and the PIP and some of the other coverages. And so it's kind of over their head and they get a little lost in the conversation. And people don't think about protection if you get sued.
Yep.
And your likelihood of getting sued after July 2nd is increasing and going up. Not to say that everybody's going to get sued, but it sure could happen easier going forward.
Yeah, there's just a lot of moving parts here and things.
Mm-hmm.
And tell me if you like this. Even before this auto reform came, I said, usually the decisions are not that hard. Okay. If I come to you, if I say, Tara, here's my medical coverage. Here's what my medical carrier is doing. Here's my auto insurance. Okay. I'm on baby step, whatever. I've got so much money saved up. I've got 6 months of income saved up should anything happen to me. My car is, I drive a 6-year-old car. It's got 100,000 miles on it. It's probably worth $10,000. Am I comfortable not insuring the replacement cost on that, which some people, oh my God, I wouldn't risk doing that. Other people say, hey, that's fine, I'll do that. But then will I have more of the liability and the medical coverage and spend my dollars there saying, hey, I don't want to lose $10,000, but I can lose $10,000 and recover in this number of days, weeks, or months. $1 million, I may never recover from. $500,000, I may never.
Exactly. I mean, those are much bigger dollars to consider, much bigger risks, and you don't know. I mean, accidents they're accidents. People don't intend for them to happen, but an accident happens. And if somebody gets hurt or killed, you might have a lawsuit that's $1 million.
Well, and that's where the point and again, the conversation inside my head when I meet with people saying, what can you afford to happen?
Right.
Losing $1,000 can ruin your day or your week, but that's okay. Let's cry over that.
Right.
Right. I joke with people in the class saying, I live in a condominium that's 17 years old. Okay. Nice place. Okay. It's got the original hot water heater. It's got the original furnace and the original hot air conditioning unit. Okay. To replace all those is going to cost about $10,000. Okay. When that happens, are you going to feel sorry for me? Shed a tear, Tara, please. No, you're going to go, you're a responsible adult. How long do you expect your furnace to last?
Right.
That's not even an accident. So be prepared for when you need to replace these or properly maintain these, because it can and will happen. Right. At some point, that furnace is going to need to be replaced.
And the more assets a person has at the time of an accident, the more they can be sued for. So you can't really outrun this. Like, you can't just say, I'll make more money to cover $1 million, or I'll make 10 million and I'll cover the $1 million nut if I got sued. But because you're worth $10 million, you could get sued for 5 million. Now you've lost half of your assets. It's just the law of large numbers doesn't allow you to outrun or outsave or out-earn lawsuits that could happen. If I was in a car accident and I hurt or killed a plastic surgeon or a heart surgeon, his life value is, worth probably yours and mine. We're in sales. They're going to get a lot more. His family's going to get a lot more if I kill a heart surgeon than if I kill somebody who works at McDonald's or somebody who's working at Kroger, and they need more liability coverage because their assets are worth more too.
Okay. Should I put your example up on the screen one more time?
Yeah.
I don't want to miss out on any of that. I really appreciate your time and indulging me in this example here, and we'll be finishing up here. So we had unlimited. There's the exclusion option. And with all of these things, there's a dollar figure that you can go over with people, or they can go over the questions they can ask their agents to say, what do I need for this coverage?
Right.
Okay.
Right.
And what can I afford, and what's the prudent decision to do for the coverage? So I think we're both on the same page. Let's keep ourselves covered against the lawsuits and protect our health and safety and the human beings that we run into, whether it's their fault or our fault. And we can be great safe drivers, but accidents can happen, and none of us can guarantee to never be at fault at some point.
Right. Right. Well, with the distractions that we have in our world, cell phones is just a huge distraction, and something can happen, or you can be adjusting your radio. The conservative, frugal person is going to pick the unlimited medical limit because that's going to provide them the best coverage to protect their own family and their own household, and that all their medical bills are going to be paid for the rest of their life.
Okay. So if they're checking back with you, this is more work for you and other agents, but I encourage people to do this as much as twice a year. If they do this now, July 2nd, and there's going to have to be decision made, right?
Right. For everybody in the state of Michigan, they have a current policy and they have a renewal date. Mm-hmm. So oftentimes that's either a 1-year policy or a 6-month policy. They don't have to make a decision right now. They can continue with the current coverage that they have. Or most companies are allowing customers to make a modification effective July 7th or July 2nd rather, if they want to make that choice. And so that can be staying with the same company and modifying the current coverage, or reshopping your coverage with all the other insurance companies that are out there in the state of Michigan, so that you are understanding your coverage and that you know what your prices are, and that you will then fall under the new laws. If you decide to wait until your policy renews, let's say that renewal date is in November, then in November you will fall under the new law and the new way of handling claims, the new process.
In that example, if my policy renews in November, between July and November, am I given the unlimited protection, or is that reduced?
You're given the unlimited protection.
Okay. And you gave the example when we started that a portion of the $220 will go away, and they'll be $100. So it sounds like it may be kind of a wash what will happen to my rates come July 2nd.
Well, every scenario is different. I anticipate seeing people who are older on Medicare, maybe seeing more of a reduction. There are a lot more components to the bill besides just changing the medical. Mm-hmm. If you did change the medical and then you were talking to your agent and they suggested going with higher liability limits since you can be sued easier now, that would make your premium possibly go up. The state in this bill has also removed a lot of discounts, so those discounts can change. There's a ton of moving parts to this. Mm-hmm. So I can't tell you that every customer is going to see a rate reduction or every customer is going to see a rate increase. I think it's going to be all over the board, and it depends on your scenario. If you simply look at the tax, the $220 per car, if you have a family like yours, Derek, that you've got a husband's car, a wife's car, and 2 children's cars, that's 4 cars. That's $880 just in the tax. Mm-hmm. Well, that could be quite a bit of savings if you decided to move away from that unlimited medical. Mm-hmm. But for a family that has 2 cars, it's not as much. It still might be something, but I think the more cars on the policy, the bigger a difference it's going to make as well.
Yeah.
So it's something you just have to really shop, talk, learn, and educate yourself about, and make prudent decisions, either now or on your next renewal.
Okay. So best advice to leave people with: they need to talk to you. They need to talk to their agent. They need to get educated. They come to you and say, here's a copy of my health insurance, or the deck sheet, or what's the operative word for their health?
Well,
what do you want to see?
They don't have a deck page for their health insurance. So what they're going to have to do is they're going to have to call the number on the back of their healthcare card and find out if they have, it's called qualifying healthcare coverage. Now, if you buy your health insurance on your own, maybe not. Like if you went through the marketplace and you bought people term it as the Obamacare coverage. Mm-hmm. If you have health insurance through your employer on a group plan, then you give that number on the back of your healthcare card a call, find out what, if they are primary on auto insurance or secondary on auto insurance?
Question is, okay, so if somebody's employed, they
Mhm.
call their HR or the number on the back of the card and they say, in an auto accident, is this like Blue Cross, Blue Shield, HAP, whatever, Priority Health,
Uh-huh.
priority, or I'm sorry, is it priority or secondary?
Primary. Primary.
Primary or secondary,
Correct.
and limited, or what are the limitations on this?
Well, one of the things we have to find out is what their deductible is. If they have a deductible of $6,000 or more, then they will have to continue to carry either the 250, 500, or unlimited medical coverage, which is probably where the majority of our people are going to fall, anybody who's not retired or already on disability.
Is there just one thing? Because I'm used to just saying, hey, get your deck sheet and show it to Tara. Well, no, and then, you look at it, and just like a doctor, or I'm not a doctor, but if I looked at my blood pressure and it's 123/78, and my pulse is 68 this morning, which is about the numbers, I know I'm doing fine.
Right.
Now it's just somebody else going, your pulse is 68, your blood pressure is 123/7. They don't know those numbers, but you look at these numbers and
right.
real quick.
Right. So, they can show me their deck page. We can go over the coverages. We can talk about what their coverages are. And then we can talk about what those options are. And then the last step will be to call their health insurance company and find out if their health insurance company is primary or secondary in an auto accident, and what their deductible is. And then we can make those determinations.
Okay. So you're able to evaluate that, advise people on all the other things that are being taken care of. And if somebody rents an apartment, I want to say, get your renter's insurance. It's really cheap.
Right.
Remind Tara, you need some identity theft insurance. It's easy to forget, but we like to have that identity theft insurance. If not, the Ramsey has their, I forgot the name of the company, but it's an identity theft. I'm sure you have one or two that you can work with.
Yep.
All these little details to go, let's get that coverage in place, save some money where you can, spend where you need to protect yourself, your loved ones, and member of society. Anything else we need to know?
No, just listen to the news, because there's probably going to be a lot of information on it. There is information on the michigan.gov website. And then our agency also has a website with a lot of information on it about the auto reform as well, which is Michigan Community Insurance /reform, I believe is the site. That might have some helpful information as well in terms of explaining this more. And of course, give me a call. I'm happy to, spend time, talk with customers, explain it to the best of their ability or my ability, so that they can understand what they're making a decision about.
Okay. I'll put your number up, double check here. Is that 248-926-1444?
Yeah, that's my office, and my extension is 126.
Okay.
But you can also put up my cell phone, especially these days with everybody self-quarantining. I'm working from my cell phone. That number is 248-249-1927.
That's good. I didn't know that. Your office has been great. I call your office and they forward to your home where you're working now. So let's get that information together so that you, as the professional you are, can look at this, or somebody's current agent. We're big believers in independent brokers. So, occasionally the State Farms of the world or the Allstate offer great rates, but as a general, that agent, it's like going into McDonald's. They can sell you anything you want as long as it's on the McDonald's menu.
Right.
If you want a Wendy's Frosty or whatever, you better go next door. Whereas you have this menu of services and competitive pricing that's available.
Right. That's just it. The State Farm, they have similar products to what we have, but they have one price, and we have multiple prices. So we can shop the markets and shop the companies and find the best package of coverages and prices, because we don't always just focus on the coverages. We're focusing on, and we don't just focus on the price, we're focusing on the benefits for the customer.
Yeah. So there's something to do before July 2nd to be able to get there. And then I'm going to go out on a limb with a prediction that we're going to get this all set up And then in 6 months and a year, I won't say all hell will break loose because Christian audience here and we want to do it, but all heck is going to break loose or not, hopefully not. But the lawyers, the changes, things, our economy will push and pull, and things will need to be reevaluated in 6 months or a year.
Right. Well, you know, and think about this. We've operated under this current system since 1972. So insurance companies have had time to take their starting point of rates and tweak them for how many years is that? 50 years. It's kind of like they had to scrap the whole rate function and start with something new. And they're going to be tweaking it and changing it and modifying it for years to come until they find that right balance between the right price for the coverage that is selected.
Mm-hmm.
And so it's going to be a moving target. It's also going to be a moving target for years in the court system as to interpretation of this new law that's 300 pages long.
Yeah. Yeah. Well, as an aside, and I'll give you the last word, but I will share. There's a lot of reasons people can complain about this, but there's a lot of reasons people can complain about anything. I want to say it's going to make us wiser consumers. We can be aware of what's going on. I know I've seen it with the medical care or prescription care. I find I've got prescription care. I've got a couple family members on prescription. I take a high blood pressure medication. I sometimes take my Good RX card, and it's less money than my insurance coverage.
Mm-hmm.
Just one example. And, you know, I'll apologize to the pharmacist by saying, hey, can you run this through again? Can you run through for my family member? What are we doing? And they're always patient. And I don't mind that because it's good for society that Derek just doesn't go in there and doesn't care what his medication is. We need to price these things out. We need to price our doctors. We need to be educated with what's going on.
Mm-hmm.
So enjoy God's blessings. Go out there, talk to wonderful people like you, and buy what we need, or don't buy what you don't need, or have one less car.
Be educated. I mean, that's the biggest thing is if you don't educate yourself, you don't know what you're buying, you don't know what your benefits are. And the best thing you can do is educate yourself on it.
Yep. Another time, another place, we're going to talk about comprehensive collision. What's the other one? Mini tort coverage. There's all sorts of cool stuff.
Yeah.
It's a blast, but people are going to have to wait for